You know what nobody tells you about getting that IRS letter? That the paper itself feels heavier than regular mail. Like it absorbed all your ancestors' tax trauma on the way to your mailbox. Yeah, we're going there today. What's good, family? How have you been? It's your girl Tasha, and welcome back to another episode of Queer Black Wealth, where we build arcs while the flood waters just keep pulling up past our ankles. I mean, at least we keep the receipts to prove we bought the wood legally. Anyway, today we're talking about what happens when the IRS sends you that friendly hate mail, like the ex who suddenly remembered you owe them money. Yeah, but unlike your ex, these folks have badges and are willing to knock on your door and have penalty fees with interest. So, before we dive in, let me remind you that everything that we do here on Queer Black Wealth, it is not about becoming friends with the system. It's about using their tools as we build something better and new. Okay? We're not here to play, we're here to win. So, boom, you get that letter. Maybe it's an audit notice. Maybe it's one of those we need more information CP 2000 notices. Or maybe they're just questioning that home office deduction because apparently they don't believe your kitchen table is command central for your side hustle anymore. So the first thing I want you to do is take a breath. Take a breath. Take a deep yogic breath, even if you don't believe in yoga, okay? Then take a screenshot because documentation is going to be our love language through this entire fiasco of a fascist system that we're in. All right? Here's what I need you to remember if you didn't from last season. The IRS audits Black folks at a 3 to 5 times rate of any other taxpayer. And usually they're hunting for that earned income tax credit, you know, the one thing that was designed originally to help working families not drown. So we're not drowning today. We're swimming, and we're going to be swimming with paperwork floaties. Okay. Now, if you've been following along with all of the different things that are happening in the IRS with this new presidential regime, you have probably heard that a lot of people at the IRS had just gotten hired and then were fired or retired or let go or just decided to quit. And so, with all of that flux going on over there and the impetus that the entire system has put on tracking things with AI, what I want you to realize is that in my profession, I can see it firsthand. It has not changed the rate of how often we are targeted for audits more than other people are. And when I say we, I am talking obviously of all of those who are historically disadvantaged in this country, but I'm also talking about middle class because it has broadened. The tax problem has broadened, and it is not just us. It is the entire class of folks who are under $1 million of earnings and who try their hardest to track and take all of the deductions they think that they are qualifying for. So I'm talking to us, obviously, right? But I'm also talking to everyone who basically has this as an issue. We have to get ready to deal with the fact that the audits won't stop and that AI is going to be involved in sending a lot of these letters out. So the speed with which they are sent is not necessarily going to shift with what you're hearing about in the news with the layoffs in the audit area at IRS. Now, after you take your breath and after you absorb that reality, and I know that my audience is really, really good with absorbing reality, here is your 3-step survival guide. I want you to make sure to jot these down, remember them so that you don't have to feel like you're drowning just because you got a letter, and to do some self-care around opening, reading, and handling the letter as well. Okay? Step 1. The paper trails as protest. Listen, When the IRS comes a knocking, and they will or may just use their version of knocking, which is sending you a letter, you need to transform into the most organized bitch they've ever encountered. I'm talking about creating what I call a defense dossier. Pull every receipt, every bank statement, every invoice from the year in question. Put it in a binder, use tabs, color code that shit if you need to. Why? Because excessive documentation is how we flip their own game. They expect us to be scrambling and disorganized and easy targets. Why? Because penalties and interest and late fees are profit to these systems. And it erodes any compounding interest you thought you may have been saving. Okay? So do not get it twisted. Everything that they expect is what we have been conditioned to do. If you look around, if you ask a friend, if you ask your uncle, you're always going to hear paperwork's a mess. I pay somebody else to do it. They should do the thinking, not me. And I hate math, right? We're flipping the script. We're going to meet them above the game that they're playing with us. And we're going to be ready. Now, instead of you doing all the things we're conditioned to do, all the things they're expecting us to do, and all the things that you've been trained by the media to do, you're going to be different and you're going to show up like, oh, you want receipts? I got receipts. I got receipts for my receipts. Here's a receipt for the folder I keep my receipts in. Okay? You make copies of everything before you send it. I mean, everything. And you're going to take photos of your photos. And this isn't paranoia. This is protection, especially in this conservative political climate. That is step one to handling this the right way. Okay, so step two is the payment plan plot twist. Now, if you owe money to the IRS, let's be real, usually when they're sending you those lovely love letters, you usually do owe them something, or they are claiming that you owe them more, right? You need to know about the two magic words that can save you. Payment plan. But here's the finesse. You don't want to just accept their first offer, and you have to remember that it is up to you, the taxpayer, to ask. The IRS has more payment options than a furniture store on Memorial Day weekend. So you don't want to go into that situation blind. You definitely want to be prepared for what type of payment plans exist. So let me tell you about 4 different payment plans that exist for all of us. And that way you'll have some things in your back pocket to consider if you know you owe a balance. First, the short-term payment plan. That is usually 6 months, 180 days or less. If you have underneath $100,000 in combined taxes, penalties, interest, and fees on your tax balance, on your tax account, your taxpayer account, then you can qualify for a short-term payment plan. That will break up whatever your balance is into 6 pieces, and you're expected to set it up on automatic where they know they're going to get that within 6 months of time. You do this on a form called the 9465 form, which is an installment agreement form. On that form, you basically break up your balance into 6 pieces. You let them know the first day and each day of the month that it's going to come in those 6 months. And you put your banking information on it and you send it to the proper address based on where you are located on the instructions. And you get on that payment plan. And that way in 6 months, your balance is cleared. The second type of payment plan that you can get on is a long-term installment agreement. This is for people who owe under $50,000, but they need a smaller amount per month to pay, right? So if you have $50,000 or less in balances and you want to pay that off in 72 months or 72 payments, then you can use the 9465 form to break that payment up, put on your banking information and send it off. And yes, there is a fee for setting things up automatically. That fee is, and I'm saying this very gently because fees change with them sometimes, but currently the fee is $22. The $22 setup fee if you do it online. By phone, mail, or in person, it's $107, $107 setup fee to do it yourself. So yes, there is a fee to set it up so that you can have it automatically taken out of your checking account. But if you don't want to talk to them or be on hold for 2 hours, then just be prepared to go ahead and send that fee in with your first payment. But you can do a 72-month payment plan with them on paper, not even talking to them. You can just send it in. Okay, that's the long-term installment agreement option. And again, you can do that on the same form 9465. Another option is the offer in compromise, or the OIC. This is where you pay less than what is on your taxpayer account listed as your owed balance. You can pay less than you owe. Okay, so an offer in compromise, or an OIC, think of it like a settlement on a creditor debt, right? Sometimes those old debts will pop up and the creditor themselves or a collection agency they've hired will still pursue you over some old debts that had late fees attached and all these other things on top of the actual balance you used, right? Because it's so old. And so the new creditor, the new collection guy will call and say, hey, we're willing to settle this debt with you. Here's our settlement offer. That's sort of the same idea here with an OIC. It's a settlement. It's the amount that you are willing to basically negotiate with them. You're saying, hey, can I pay this amount? And you and I just call it even, right? And let's shut this thing down and say that it's completely paid for this amount because this is what I can afford. That's what an OIC is. Now, to be able to get that, you do have to qualify and you do have to send them a packet of paperwork that shows what your financial situation is and why you can't pay the whole balance, right? So you send in this packet called the 433. The 433 is a packet of questions that they will ask you to fill out on your income, expenses, debts, and things that you're going through that prove your case, okay? So when you're sending this information in, it might bring up some feelings, okay? I'm just being honest with you. It might bring up some feelings. It might be something that you really have to sit with by yourself on a day where you can really handle it, but it is an option. So you might actually get an answer that's, okay, sure, we will go ahead and take your offer. And then you're paying less than what they said you owed and you're clearing the balance out and you're moving on. That is what an offer in compromise takes, but it's a great option for people who need to be able to just get it off of their record, but pay less than what they actually owe. Because again, you and the IRS knows that a lot of other fees and interest and penalties have tallied up on top of the actual tax you owed. You just need to prove to them that today you're not in a state to pay that entire amount and you're willing to settle your debt with them for a lower amount. You just have to prove it on paper that that's the situation. So that's what an OIC is. Something very similar, and the last one that I'll give you today, is what's called currently not collectible status. Now, if you are really struggling, if you have done a 433 and it is upside down and negative by the time you get to the end of it, a CNC status might be the thing to do. Now, currently not collectible, or CNC status, is a code that they put on your taxpayer account. And even though you owe a balance, that code protects you from further lien, levy, and collection activities until 6 months or even sometimes a year or more, depending on the situation. Okay, so CNC status is something that you definitely have to make sure that you do the biggest 433 form to prove not only am I unable to pay the balance or a smaller balance, if I paid anything, it would affect my ability to eat. I am going through a hardship right now. Here's the proof of that. Here are all my income sources. Here is a list of my expenses. Here's all the other debts I owe. Here's the upside down negative number that's left for me after every month. And this is why I am unable to pay. Can I please have CNC status until said time where I'm going to get that new job or make some money in my business? And at that point, I can do an installment agreement with you. Okay. So those are just 4 different ideas for you to consider. There's a couple of other different things that you can do, which we'll get to in step 3 with a representative or working with a professional. But I wanted you to have some payment plans in your back pocket, because if you know that you owe a balance or that you possibly could, or you're surprised to find out that you owe more than you thought you did. These are 4 ways to not stress too much about it and actually have a plan of action if you get a letter. And finally, step 3, which is the representation revolution. This is a move that changes everything, because this one is one where you don't even have to talk to the IRS alone. You can have a tax professional, an enrolled agent like myself, a CPA that specializes in tax, or even a trusted friend with a power of attorney to speak for you. There are also low-income taxpayer clinics that provide free representation if you qualify. I'm going to link that in the previous show notes that I did and a video that I made for my firm so that you can get there easily if you need to. But think about it. In certain situations where you're going through a lot in your life and you truly just need to get this worry off of your back, this is definitely an option for those people who don't or wouldn't want to go through something like this all by themselves. This is also an option for folks who are going through this for the first time, the very first time in their lives they ever got a letter from the IRS that says they owe some money and they truly don't know how to handle it. Well, it might be a good idea to look into either the low-income taxpayer clinic, depending on how much they made and how much they owe or how much they can afford. Or if you're a high earner, small business owner, you're a busy person, then looking into getting an EA or a CPA that specializes in tax to help you with this. Or a trusted friend, again, with the power of attorney, because you can get that friend to sign a form called a 2848, and they can speak for you in certain situations if you trust them enough to do that. And this is a friend that you give your financial information to, because that friend is going to have to know everything if you do this with them, okay? So just so you know. But it is a possibility. I know for the queer community, a lot of times our chosen family are the ones that help us through things. So I just wanted to give you that as an option if that's something that you might want to consider. Now, again, when it comes to representation or having someone represent you or do things for you, like on your behalf with the IRS, it's the same as, situations that definitely call for someone else to handle it other than you. Think about it. Would you perform your own root canal? No. So why try to negotiate with the federal government solo? Help yourself and prepare for the strategic overwhelm that type of thing might cause you if you're already going through a lot. I've had clients who come to me after divorces as they're moving in and out of the country, people who have had deaths of spouses in the family, people who have had medical problems themselves, people who have gone through lots of different mental health situations where they just couldn't, right? People who have been dismissed from their families and they're, queer and they live in a conservative South and they just need someone to help walk them through the steps. Those are those situations where, no, you may need some help. Let's look at either a professional or the LITC to figure out if there's some advocacy that can help you through it. Now, when they audit you, and in this political climate they might, you won't just be ready to face it. You'll be overly ready. And you are so ready, you'll give them all the documentation that they need. You'll have so many receipts ready, they'll need a forklift. You will make reviewing your case so tedious, so thoroughly documented, that they'll either give up or realize you're not the easy target they assumed you were. That's kind of the idea, that if you go through this alone, if you don't feel that way approaching it, it's probably a good idea to call a professional to help you. Now, I recently sent out a Substack that announced that Left Out No More, a Queer Black Wealth Manifesto, is available. And I'll leave that link below as well. But within it, in one of the earlier chapters, I talked about a tax case with Jim and Martha Flake. You can look it up. The United States Tax Court, Jim Flake and Martha Flake were the petitioners on that docket. Their story is your story, but a different soundtrack. So let me tell you a little bit about what happened with the Flakes. So these folks saved $177,000 in cash over a 20-year period in a fireproof box. The American dream, right? wrong. The IRS showed up at their house 26 times. 26 times because they didn't keep a perfect mileage log when they asked for mileage deductions on their tax returns. Now, here's where we need to talk about facts versus truth, okay? The facts say that LGBTQ plus people, especially trans folks and people of color, face disproportionate rates of poverty and financial instability. I've seen these facts play out over decades in finance that I've worked in it with people directly. But here's our truth. When we look in that type of situation, knowing that if that's what happens to folks with six figures in savings, what chance do we have if we are not ready? Okay? So in this type of situation, the flakes lost because they created their mileage log during the audit. They lost because their mileage log was being created as the audit was going on. This is the big mistake, okay? And it's huge that you understand this. You need to keep that mileage log while you're driving, not while the IRS is breathing down your neck after the fact. See, the tax code is written in such a way where if the IRS can log proof that you never intended to pay a tax as you were earning it, okay, and let's stick a pin in that because we will revisit this for my freelancers who send in zero all year and pay with a penalty at the end because they never set up quarterly estimated payments designed for our pay-as-you-go system. Just stick a pin in that. So they will look for the pattern of this person. Is their pattern following tax code of law as it is written, being as you're earning it, you pay as you go? Or is this person avoiding doing that? And is that the pattern we see? And can we prove it on paper? Prove it with the historicity of this taxpayer's account. That's the way penalties are assessed when people don't pay their quarterly taxes, freelancers or self-employed, independent contractors. This is how they get you, okay? The penalties. So they'll label these penalties exactly as you not following the law. And they're assessed automatically by the computers now, and now the computers have been beefed up with AI. So later, when the computers rat you out, when you're asking for favors like settlements and OICs and abatements, when you're asking for those type of favors and you're struggling and you're asking them, hey, IRS, can you let me off the hook? The computer record of how many penalties you were already charged so far, boop, pops up. And that's used to determine if you ever get more help. Granted, since it happens a lot, lots of people historically have been able to get some help. But look around, fam. Do you trust it to stay that way right now? Wouldn't it be more prudent to not necessarily obey in advance, but plan ahead so that at the end of the reality day we all are living and have, you keep more money in your pocket? Get yourself a little notebook, keep it in your car. Every time you drive for business, write it down. Date, starting, mileage, ending mileage, where you went and why. Takes 30 seconds. Saves you thousands. You don't want to use pens or pencils anymore? Fine. QuickBooks has a solopreneur software that has a mileage tracking system embedded right on in it. If you don't like that, if you don't like Intuit or QuickBooks, try one of the focused apps that just do mileage, like Mile IQ. Not yet sponsoring me at all. Anyway, but it lets you swipe left or right, business or personal, and it stays on your phone to track you with your GPS. And it'll just ask you, hey, beep, which trip is this? Is this business or is this personal? And all you have to do is swipe left or right on your phone, right? And then you can fill in all the deets later and bam, magically, monthly or yearly, you can have a spreadsheet pop out already pretty, already logging when you actually track the information in real time. And it's ready for your accountant or the IRS. And if my dreams during my lifetime come true, because you wanted to be a proactive person after listening to this podcast and me preaching all day. So bring a tear to my eye and just pick a tracking method. And again, if you can't remember to write it down, use one of the apps. Take photos of your odometer. Send yourself a text. I don't care if you tattoo it to your arm. Just do it as you go, right? That as you go style will help you save tons of money. Okay? Now, the flakes had all that money in a fireproof box and still couldn't prove their mileage. So don't be the flakes. Be the person who makes the IRS agent go, you know what? This one knows what they're doing next, right? Goodness knows, being a dork like me and having a passion for this sort of thing is like being a Robin Hood who steals knowledge from the rich and gives tax breaks to the poor, except it's all perfectly legal and requires extensive continuing education credits, and unfortunately continually makes me in constant state of defense to those who claim that I've lost the revolutionary plot. Anyway, so having representation will do two things if you do follow the step 3 offer that I gave you earlier. It will put a buffer between you and their intimidation tactics because they are collectors of a debt. That's all it is. But it also shows them, if you do steps 1 and 2 yourself, that you're not here to play. You came prepared, you came protected, you came to win. And I'm telling you, fam, it is the only way to play right now. It just is. Now, I know what some of y'all are thinking. Tasha, this sounds like we're just complying with the system. Nah, this is infiltration. This is taking their compliance requirements and turning them into armor. This is building your ark with the proper permits so they can't tear it down while you're loading the animals during the flood, okay? Remember, every receipt is resistance. Every properly filled out form, and filed form is a middle finger wrapped in their own red tape. And trust me, I have not lost the plot on them screwing all of us over, because it's not just us that they're doing that too. What I am telling you is that when you protest in a way that makes you more vulnerable, it hurts you and everyone else collectively because it just raises the alarm to give them all the justifications to come after us harder. And that's why I'm really passionate about talking about this, so that you feel like you can protect yourself. That is what this is about. Let me tell you about a prior client of mine. We'll call her Keisha for privacy. She got audited 3 years in a row. 3 years. Why? Because she had the audacity to claim her home office deduction while running her consulting business. Now, the first year she panicked. She lost sleep, almost gave up on her business entirely. The second year, she got smart. She hired an enrolled agent and documented everything down to the square footage of her desk. And then the third year, she walked into that audit like Beyonce walking into the Super Bowl, okay? Binder in hand, representation by her side, receipts for days. So not only did she prove every deduction, but they ended up owing her money from a credit she didn't even know she qualified for. That's the type of energy that we need to be bringing into 2025 and beyond, because whatever's happening right now in our political climate will have a residue that will hover, right? And you want to be able to do things in such a way where your protest actually comes home and gets back in your pocketbook, right? Gets back, I just dated myself saying pocketbook, gets back in your wallet. Google Wallet, Apple Pay, I don't care. Anyway, that's the energy that I want our community to have. We're coming in ready. That's the point. Look, I can only give you so much game in one podcast episode. If you want the full blueprint, the chapter by chapter breakdown of how to build wealth while staying ready for whatever these systems might throw at us politically, for however socio-politically and socioeconomically things might change in this America, okay? And for situations that could change either for the better or the worse. When you're feeling like the rug might be pulled out from under you and you're just truly not sure what to do, and you also know deep down that the vanilla advice that is what we all have called financial literacy just doesn't truly fit anymore, right? Save more, budget better, invest more, earn more, spend less, all of these different rules that kind of come in different packages with different faces on it, but basically say the same thing. Yeah, this is a little different. So you need to get your hands on Left Out No More, a Queer Black Wealth Manifesto. I've already dropped it into the Substack. I have the link to where the book is currently available. I am going to be broadening its availability, so you might want to catch it for the special price that it is right now, because once I take it over to the big platform, then I will have to charge more for it because that platform is taking more of a cut. Anyway, that said, I am really, really excited about it because it is going to give you more ideas along with some inspiration and a little bit of hope around what's happening now and all the things that we see that just doesn't work. And it does satisfy a few of us who are really, really hungry for something that is an alternative to the typical modern day capitalism that we see around us crumbling, right? This ain't your average money book. This is a financial underground railroad. This is your guide, your blueprint for building wealth, real wealth, community wealth, not just getting rich and dying alone with money or being the richest person in the cemetery, right? So I want you to head to the show notes for the link to go ahead and purchase your copy now for the special price before it goes to that other place. Okay, and remember, we're not here to play. We're here to build, we're here to rise, we're here to thrive. I just want you to show your receipts. Well, that's all I got for you today, family. Remember, when the IRS shows up, you show out with documentation, with representation, with an unshakable knowledge that you are building something that they can't tear down. That we actually do have ancestral blood and cells and just nerve endings inside of us that remember not just the trauma, but also the ways that we built a wealthy community with each other. And we can get back to that. And we probably should. So keep your receipts crisp and your documentation thorough and your spirit unbroken. Until next time, please stay free. Peace.